Welcome to a Dictionary of Finance by the European Investment Bank, and we will today do a second show about Bitcoin.
Bitcoin.
Yes, but first I need to correct a mistake in the previous episode. Taylor Swift's Twitter handle is not at Taylor Swift, but it's at Taylor Swift 13.
So if you've been tweeting to @Taylor Swift this week, you've probably annoyed some guy from Kentucky. Well, okay, so we've got @Taylor Swift 13. You can tweet to her about how great it is to find a dictionary of finance on Spotify alongside her music. We're as big as Taylor Swift.
About to be, for sure, especially if you subscribe and rate our podcast, so please do that. But now, on to
Bitcoin. Let's talk a little bit about Bitcoin and its relation to the real world. If you have a regular currency, let's say it's the pound, it's the euro, it's the yen, it's the dollar, you know what affects that. It's tied somehow to a geography and to an economic geography. You know that if the dollar goes up, it's good for imports. If it goes down, your exports are cheaper for people in other countries and so on. So you can see how it's tied to a country and to that economy. But what is Bitcoin tied to?
Okay.
Is it even a currency in that sense?
Well, it is I would say all these systems, in essence, first of all, they are a currency. But I think media should start not talking so much about the currency aspect anymore, because there's much more out than just currency. So there is the currency aspect, like indeed Bitcoin, even Zcash, Monero, and which just try to address really the cash part. But then there's also a secondary element that started really with Ethereum. So besides the smart contracting part and getting actually business logic and execution logic onto those blockchains, but it's more it's almost like a commodity, if you like. And I mean, on general trading, so there are commodities market. And in my view, this will happen, and it will happen probably in 2018. And that's why we saw also end of 2017, we saw, the CME and CBOE actually starting future trading. But this again was just on the currency part. Then there is probably the third one. So if you take again the example of Ethereum, so Ethereum, if you think of Ether as a commodity, then on top of that, you will have and more platforms who do really do business logic. And I can give you really a lot of examples, but one is, for example, Augur, which is decentralized prediction markets, a new coin coming around right now, which is called Globcoin, which is basically a currency basket. So it's pegged to fiat currencies and 5% of gold, I think, and that makes it a stable coin. And the third one is like, if you look at these CryptoKitties, which is probably like collectibles. So really what is happening right now is we're really discovering a new asset class. And there are different verticals, the ones which I just mentioned. But if you look in the history back of Bitcoin, so in the beginning you had Bitcoin, and then all of a sudden everybody was only talking about blockchain. Nobody wanted to talk about Bitcoin anymore. But now we're really moving into another, let's say, era, another time of this revolution, and that's really on the asset side. And recently Nasdaq, they said they don't want to necessarily go into futures, but they're looking into it, and so they will have a bunch of analysts who are gonna look at this and try to really make sense of it. But if I come back to your first point in terms of currency, and you say it's geographically linked, actually if you look at the US dollar, the US dollar is really the export good of the United States. Bitcoin, what it has brought is really also it's an open market for trading those coins. It's a peer-to-peer, and what makes the price fluctuations, there are several aspects. One is feedback loops. So if you have people who sell large amounts of coins, they will actually directly, because there's not enough liquidity in those markets yet, and it will directly impact the price. It will go up and down. Then any type of media, if you have the media talking badly about it, immediately you will have a bearish market. And you have to understand, if you have a bearish market on Bitcoin, all other cryptocurrencies will become bearish as well. So it's really, it's like if you hit the mother, actually the children will suffer as well. This is why also when you want to make an exit on one of those markets, it's quite hard, and you probably lose quite a lot of money because there's nowhere where you can park it, because on the exchanges you can only withdraw a certain amount of coins. And this is why coins like T-Ether or this new upcoming one, Glockcoin, will bring stable coins, because they are pegged to real world, let's say physical world assets, and those currencies are then they're much more stable. And okay, on the other hand, we will very soon see, and I think in 2080, we will see announcements of federal governments and central banks actually issuing their cryptocurrencies.
Well, you mentioned a couple of exchanges there, the two in Chicago, the CME and the CBOE, and then you mentioned the NASDAQ in New York. Mm-hmm. Should we really start thinking about these things that are called cryptocurrencies as kind of over-the-counter futures and options and things, just the same as the way those deals are done?
So if you think of them as assets, then yes, I believe this is what's going to happen, and this is what people will see and start to realize, that actually you can then make all sorts of financial instruments from them.
But things that are connected to those exchanges get regulated by government.
Yes.
So, and there are some governments talking now about regulating some of these markets. Is that likely to happen, and why do they want to do it?
So, the reason, basically, one reason is KYC and AML, so know your customer, and anti-money laundering and tax evasion, basically, and also due to counterterrorism efforts. I would say these are the main concerns, and that always boils down to know your customer and do the proper due diligence test there on the identity who comes to the exchange. Once actually you have a currency which is issued by a sovereign entity, as I mentioned earlier, it's very every transaction is traceable, so you can really see what's happening. So basically you cut out all black money and tax evasion issues and everything that goes with it, for the price actually of privacy. So you would lose privacy with such system, and also fungibility and all these things will disappear by that. And there are rumors that there will soon be a Fed coin, probably other central entities will issue, let's say, cryptocurrencies soon. And how decentralized they are, I don't know. Let's see.
But I could still exchange with you without telling anyone.
We could. There are also sites, local bitcoins, for example, where you can do that, but the price is much, much higher than on the regular market. But this is coming. And for example, if you look at South Korea, which has been in the press quite a lot, so in the beginning of the year there was an announcement that they would totally ban cryptocurrencies like in China. This was actually false information, and there was then also some insider trading and so forth going on. But in the end, what it seems to boil down to, besides there were two ministries which were talking different. So one was saying, the Ministry of Finance said we need to ban it entirely, and the Ministry of Innovation, I believe, said no, actually we cannot. In the end, as it seems, it will be regulated on the exchange level. And again, this is about KYC and anti-money laundering.
But I mean, that's the issue, though? There also is tax. Is that
yes,
they want
tax.
you to pay it somewhere?
And this, it's clearly understandable that you have to declare your profits, which is not easy, by the way, not at all, because when you make such transactions, they're very much split into tiny transactions, and to get actually the market value at that time, and before you have done other exchanges, the currencies and so forth. Actually, this will be a total nightmare for financial offices, for
accountants
for accountants
sure, yeah.
And for the finance office, the finance office,
that, yeah.
and So that's why people are talking much more about nowadays. Let's say in the fintech world, okay, you need to have a regulatory window in order to that the regulator can look into it. And let's say on closed blockchains, that of course can be done, but on open ones, it's kind of hard to do. I mean, if the transactions are openly visible, fine. But yeah, I mean, we're still.
Is that the first stage towards making these things that actually you and I might just be using every day, rather than as an investment and so on, but that we could actually go and I could buy you coffee with a Bitcoin?
Bitcoin right now, what it is most closest is really digital gold. And let's face it, I mean, I don't go out with a Kruger Rand, if I had one, and buy a coffee, or some other good. You want to keep those. So in that sense, it's really an asset, and people want to keep it as a store of value. So the store of value aspect is much more predominant.
And the reason why it wouldn't be very effective to pay with a Bitcoin would be that processing that each transaction of coffee takes a lot of fees and power and time to get it through the whole system to get it verified, right?
Exactly. So at the moment, really, the Bitcoin network has that, which was implemented actually in 2010 by Satoshi Nakamoto himself or herself, which was a block size of 1 megabyte, and these are these consequences of it. There is, however, an initiative and a project going on which is called the Lightning Network. It's in development, and which is like a side chain to Bitcoin. It's basically doing transaction. You don't record every transaction on the Bitcoin network, so to speak, and you have channels between, and then periodically, as far as I understand, you would just let's say update. But this will make it much more scalable, bring much more transaction throughput, and bypass those problems.
But what's common about these different cryptocurrencies? Is it the blockchain? That's something that all of them share, or what are the similarities?
They all have, I would say, consensus algorithm, one form or the other. So proof of work, proof of stakes, DPoS, POI, Ouroboros, and whatnot. And then on, let's say on the strictly blockchain related, or actually one step before, they all are decentralized, or try to be decentralized in any way, that they all have in common. And then if you look at the pure blockchain related technologies, yes, of course, they have a blockchain related. And why I say purely or basically they have a blockchain technology is because they're also something which is called DAGs. And then one example is IOTA, but there is also the INT, Byteball, and so forth. They do not use a blockchain, but they use another mechanism. And IOTA, for example, uses a tangle structure. So that's a slightly different, but they're all in any case decentralized. And the last point is, let's say for tokens. So when they are public systems, then they need an incentive mechanism for incentivization. So they create tokens in order to reward, do payments, and incentivize. And in essence, then to solve a trust issue. And if they don't solve a trust issue, if they are public or private or semi-private blockchain, then they do not necessarily need a token. No.
Mm-hmm. But the decentralization, if I'm trying to engage with the cryptocurrency from regular funds or from my regular currency, I still need a central agent to oversee that entry into the world, right?
Yeah.
Because I need an exchange who will confirm that I have given you however 100,000 euros or whatever the rate currently is, and then when it is proved that I did that, then I get that Bitcoin from you onto my virtual account.
That's very, very correctly put. And this is I find really a weakness about the whole architecture is actually the key infrastructure part is centralized. There are decentralized exchanges already out there. 0x is one, then Shapeshift I think is decentralized. There are really several projects out there which will address that, but right now there are still centralized entities. Yeah.
Is this good for the world? where is the computing power? It's not in Africa. It's not in places which are already, behind the developed world. It's another thing that, let's say, we can do that the developed world can't participate in. Is it really a good thing?
I think it's a good thing, because it reshuffles the game, and it lets really people participate even with small funds in projects and having new opportunities. And all you need is really, you need a smartphone, and that's it basically. This is not necessarily only the most secure part, so you need to do much more about it to keep things safe and stuff. But I think it's a good thing, and it's a natural thing really, because we are digitalizing all our world, and this is part of it.
It's actually a lot of money to buy a Bitcoin at the moment. Let's see, I've got a couple of figures here. January 2016, since then it's been up 1,100% compared to, let's say, stock exchanges, which basically haven't moved. The current value is around $11,000 then?
Yes.
But in late December it was $20,000.
Correct.
And it's a $370 billion market. So that must be, that's quite a wild ride if you're an investor. You see things go up 1,000%, but then in one day, Ethereum was down a quarter of its value one day this month. Ripple was down a third. That seems like a pretty crazy thing to have your money in.
It's very volatile, the market. And this is, as I mentioned earlier, it's because there's not enough liquidity in the market. There's a project called Quash, for example, who intends to address that. But we saw in 2017 really the rise, and this is why so many people have become interested in it. And as of 7th of January, basically there has been a bearish market. And I would say let's see what in the next couple of months happens in terms of politicians, what they're going to say, and also regulators and so forth. I don't know what's going to happen. Let's see.
One final thing that I just have to ask you about. You mentioned earlier a cryptocurrency that's actually kiddie collectibles. What was that one?
CryptoKitties.
CryptoKitties.
Yes.
Does that mean you don't have to have kids and you don't have to feed them or anything like that? You just
kitties.
have fake
No, it's
kids.
It's kitties. It's
kitties.
It's kitties. Yeah.
Oh, okay. I was just looking how I could maybe trade my children, perhaps, but no, we won't get into that. So you have like a little, instead of keeping a pet, you.
Well, you have basically a small kitty that you look after. It's a collectible basically.
Wow, those are not $11,000.
I'm not quite sure how, but they
will be soon, I expect. Fantastic, Marcus. Thank you so much. As this market or markets develop, we'll probably have you back here to talk about what on earth is going on. But thank you for explaining.
Thank you very much for having me. Thank you.
Do subscribe to our podcast. It's very easy to do. We're on iTunes. We're on Stitcher. We are now on Spotify. I don't have an account, but you're a Spotify guy, aren't you?
I'm a Spotify guy, yes.
You can take a break from Taylor Swift for Marcus Wilms instead, and Bitcoin. So you can also get in touch with us on Twitter. I'm at EIBMatt, EIBMATT.
And I'm at sorry, I'm not.
Yeah, you should be. We should change it to at EIB
at
Tank.
Tankler, ALLARTANKLER. Also rate us and tune in again next week for our next episode of A Dictionary of Finance from the European Investment Bank.